What's good, people, traders, and dedicated gold chasers? Welcome back to another video at the Modern Day Trader. Slightly a bit late, however, we're still on time, man. Anyway, let's jump straight into the video, and I'm just trying to get my marker. So this was Monday of last week. I just literally took two trades last week, so it was a break even and a loss. Let's run through the charts really quickly. So you can see coming into Monday, we're forming lower lows, lower highs, lower lows, lower highs, lower lows, and then we have a clear break of previous structure, clear break of previous lower highs with this new high being formed. And with that being formed in Asian session, I'm anticipating that when London session come in, we're gonna get a clear pullback into these areas. Since we had an impulsive push to the upside, I'm anticipating a bounce off from the 61.8 area, and you can see we had a clear bounce. We then pushed up to more than a 1-to-1. I think it was 1.1 to 1.5, and then price action actually came down and took me out at break even. It just is what it is. It's part of the game. I thought this was a really good trade. There's nothing that I could have done about it. I followed my plan to a T, and it just is what it is. Going into Tuesday, what you can see is the price action after forming these highs from Monday. So after forming these highs from Monday, you can see in Tuesday we just tapped into it and we bounced off from it. And these lows that I still kept on the chart from Monday to, you can just see the price action actually just range for the most part of the week. And then what you can see is that thereafter price action had actually pushed to the upside, collected liquidity above these highs, and then you can see the displacement to the downside. Now this is where I got my second trade, which was the L, and I think I could have done anything better in hindsight. I guess like just managing it a bit better. That's pretty much it. But other than that, like what you can see is that we broke these highs right here, broke all these highs, and then we made a new higher high from these areas right here. And then what you can see is that price action had actually broken in this initial push to the downside. We then had a proper pullback correcting to probably around the 50% area of this impulse, and then you can see a decent push to the downside in Asian session on Friday. So when we got this decent push to the downside, now I'm not gonna lie, should I have taken this trade? In hindsight, probably not, just because if I'm looking at this as my clear low, then maybe not, because then this whole area should then be my impulse, and 61 would have been in and around these areas. And then I think regardless, I would have gotten taken out, because even like this still came all the way into uh London session, but I never usually like take any entries above or below the Asian high or low of that particular session. So with that being said, what you can see is that price action had pushed down. I then, with my obviously with the way I looked at the market at the time, what I did was I considered this to be my most recent lower high, this to be my most recent swing low, and I'm anticipating that when price action pulls back into the 61.8 area, that we should then push to the downside. Unfortunately, we failed to push to the downside and we just continued, took the L, walked away for the week at -1%, and it just is what it is. Now, I don't want to really walk into this week's price action just yet, but that is my review. Two trades. There is definitely a lesson to be learned in this impulse right here, because you can see that yes, we had broken structure from these areas right here with this push to the upside, formed a higher low, higher high. We then broke price action right here. So I don't think, like, if you're looking at it from a 15-minute perspective just in and of itself, if there was really anything that I could have done from a structural point of view. But if you're just looking at it from like a zoomed out eagle's eyes perspective, what you can see that we were actually in a range, and that if I could pull, I don't think I can pull this, but if I could pull this all the way to the left, you can see that we were actually within this range. And yes, we peeked our heads out of this range multiple times before actually swinging to the downside. So we peaked out there, swing to the downside, collecting these downside or sell side liquidity before then expanding in the current week. So in hindsight, I think this was just an accumulation phase, accumulating buys and essentially like taking out and faking out both the buyers and the sellers before then showing its intent to push to the upside. I got caught in it. It's perfectly fine to admit it. It's just about learning your lesson from the actual market and learning how to adapt to that particular market structure and what happens and the market occurrence at that point. It's perfectly fine as long as I followed my trading plan to what I saw in the market at the time. And I'm perfectly fine with taking the loss. I'm perfectly fine with walking away with that L for the week. It's just about following the plan in its entirety. So, guys, from me, William Master at the Modern Day Trader, please don't forget that your unmatched perspicacity, coupled with your sheer indefatigability, makes you a feared opponent in any realm of human endeavor. Have a wonderful week ahead. Peace out, man.